Okay.
Hey everyone, welcome to the live stream. We are going to have a duo for you today. We're going to start a podcast on Friday evenings. I've got a fellow investor, trader, Fred, with me today. He's got a channel. He's
Hello,
going to tell you
guys.
about his channel a bit later. And I wanted to kind of set this up and just let you know what this podcast is going to be about. So I think I've known Fred for a little while, and he's a younger guy, has, I think, more of a trader mentality, where I'm an older guy and I have more of a long-term investor mentality. I think bringing those two different points of view is going to be interesting as we look at the market and we go about our investing or trading in an effort to build wealth, to make money. So hopefully you enjoy this particular podcast and you enjoy future podcasts that we're going to have on Friday evenings. So Fred, how you doing today?
Good. How are you?
Excellent,
What's up,
man.
guys? My name is Fred. I started a channel called Toast Beans. You guys can check it out. It is youtube.com/toastbeans, where I go over the overall markets, and I also talk about the economy and its effect on the stock market, and also go over individual stocks. And not only that, I also have a website called toastbeans.com, where it is a stock insights application where you guys can check out individual tickers and the overall markets. What set this app different from all the other stock analysis app is that I have my own individual stock insights for every single stock that's out there. So for some general stock analysis website, you have your basic financial reports and you have to read through that. But we make it simpler for you guys. So I do the analysis, I do the research, and you guys can just read it and make your investment decisions based off of that. So go ahead and check that out. And I'm going to go over the overall markets today. We had a pretty
And
tumultuous
Fred,
week, I would say.
sorry to
Yeah.
interrupt, but your screen went away, and so we
Oh,
can't see your screen. I'm projecting so we don't have a big dark screen, but if you want to try to share your screen again.
oh, there we go. Let me share my screen.
You are
Cool. Can you
live.
see my?
Yeah, I
Awesome.
can see your screen.
Awesome. So I think we had a pretty tumultuous week this week with starting with the Moody's credit downgrade on Monday. And that kind of rocked stocks a little bit with a gap down on Monday, but stocks quickly recovered into Tuesday and Wednesday with the bullish momentum. And on Wednesday, we had a poor bond auction, which really sold off the stock market, and stocks haven't really recovered towards the end of the week, where we had Trump threatening a 50% tariff on the European Union, and also Trump also going after Apple, where he must pay 25% tariffs on iPhones if it's not made in the United States. And yeah, stocks haven't really recovered yet. And next week, we're looking forward towards Nvidia earnings. And yeah, what do you think about the tariffs and the taxes that Apple has to pay, Victor?
That was big news. I mean, I think that Apple was already had their hands full trying to get a good solid strategy. They're not growing their
Yeah,
business, and now that tariff could really take away profits from them. And or
right.
if they raise prices and they're not able to sell the number of units they would like to sell, they lose
Hmm.
more market share to Samsung, Huawei,
Yeah,
all the other alternatives to the iPhone. So it's pretty threatening to Apple.
right. I think earlier this week, Apple also raised their buyback prices for their used iPhones in order to combat some of the issues that are going on in China. Like they're trying to gain market share with Huawei and Xiaomi. And it seems like they're struggling a little bit in China as well. So this is definitely going to be a big blow if Trump actually follows through with the 25% tariffs. Like not only that, I think that moving all the factory and infrastructure for manufacturing into the States would take years, if not decades.
Yeah, it would.
And
It would.
yeah, and I would say that interestingly enough, maybe Trump's 50% threat on a tariff threat on the European Union has to do with the bond market as well, because you might not have noticed, but the 30-year Treasury yield went above 5% this week, and the 10-year Treasury yield kept climbing as well. So Trump, whether or not you like it or not, he's paying attention to the bond market, and the reason why is because he wants, you know, attack the deficit problem in the United States. So the United States has both a fiscal and a trade deficit problem. And because of the piling debt that we have, we can't really ignore this no longer. And that's why he's really going after these tariff issues. And I think that over the near future, regardless of whether or not there's going to be sustained bullish momentum, the markets will continue to get rocked by tariff news, whether or not with China, with the European Union, or various other countries.
Yeah. Yeah. If I could comment on that note, right?
Yeah.
So be careful what you ask for, because you just may get it. In a lot of ways, my whole adult life, I'm 56, right? So when I was 20 years old, all I heard was, oh, we're going to go down the drain because manufacturing is leaving the U.S. And at that time, I live in Southern California. When I was in college, we had the aerospace industry here in Southern California. I mean, it was big. McDonnell Douglas, where SpaceX now operates, that was a shut down and shuttered aerospace factory that they thought, hey, look at this. It's an empty aerospace factory. Let's just take that property and use it. Now SpaceX operates in Hawthorne, California. Where am I going is it was doom and gloom. Oh no, we lost aerospace out of California. Oh no, we lost semiconductors in the late 80s, early 90s. And I'm here to tell you that it wasn't a bad thing, because what the US was able to do is focus its intellectual muscle capacity to create phenomenal software companies, phenomenal intellectual property based companies. And what you're able to do in this connected global economy is you get to keep the best jobs, right? You keep the developer jobs, the designer jobs. You design the iPhone, you have it manufactured in the least cost region of the world, and then you distribute it and you make massive profits. And you became, Apple for quite a while became the most valuable company on the stock market. But you look at Google, right? Google's an intellectual property company. Amazon, now with AWS, phenomenal business. So when we talk about, bringing the iPhone back, I think it stands to risk exposing some of these industries that we take for granted that we sell globally. Think about this, right? Like Microsoft sells copies of Microsoft Office, Microsoft Excel, Word, PowerPoint, the operating systems that go on, PCs. And the margins are extreme, like 80, 90% margins. Well, other countries could be like, okay, you want trade war? You got it. 100% tariff on software. And that would hurt. That would hurt jobs all over the country. But it would hurt where we kind of take those industries for granted. And I can go on and show you other examples. So yeah, we could definitely get those jobs back for the iPhone. But what are you getting back? You're getting back blue collar jobs. I have nothing against that. But you're going to give up some really good white collar jobs or developer jobs where that person made, a nice $150,000, $200,000 income for themselves every year, and you're replacing it with a $75,000 job. And it's like, well, that didn't work out really well. I'd rather keep the really good jobs and get rid of the jobs that aren't that great. So I think it's it's like a one-sided strategy where we're just taking and not observing that, hey, what are the advantages that we have in this model, right? We don't want to make computer equipment in the U.S. domestically because it's very toxic. It's also expensive. Factories are expensive, so it's predominantly manufactured in China. Car parts, a lot of parts are manufactured in China for the same reasons that, hey, somebody else wanted to do the hard job and they took it on. If we want the hard jobs back, we could probably get them, but we're going to have to sacrifice all the good jobs.
Right. I think I agree with you. So I don't want to get too political, but I think Trump understands that the majority of manufacturing or the other jobs probably won't come back to the United States. And I'm not sure what his end goal with Tim Cook, the CEO of Apple, is, but I think that it's probably another negotiating strategy that he uses with all the various other countries. And for example, I think that if Trump really follows through with the tariffs, like the 50% tariffs or the other sky high tariff rates with other countries, he probably knows that he's going to collapse the US economy. But at the same time that he faces a difficult issue because he needs to, really bring down the trade deficits and the fiscal deficits that the government is contending with currently.
Yeah, those are big, massive undertakings, trying to get the deficit down. I think it's important, by the way. I'm in favor of it, and I think they should really look at spending and reduce spending. I'm in favor of that. So I'm in favor of it. But I think the tariff playbook, I want to say that the way it played out, when we went against the tariffs that came out, I guess, a month and a half, 2 months ago, and pretty much brought the stock market. I mean, the stock market nosedived, right? You can see my screen. When these tariffs were announced and the stock market nosedived over like 4 trading days, 12%, it was breathtaking. It was like, oh boy, look at that. Is this like COVID number 2? Is this like the Great Recession or that time? At that point in time, we had these types of days. So this really scared the government. And at this time, interest rates, the bond markets freaked out.
Right.
So back to Europe and the tariffs. I think countries are not going to call our bluff. They're going to be like, yeah, you're not going to, I mean, come on.
For sure.
You tried that. Your stock market tanked. So all we need to do is let this thing go for 2 months. Your stock market's going to tank, and then you're going to give it.
I also agree. I think that, and countries know what Trump's playbook is from Trump 1.0. I think people know that already. And I think that, like you mentioned with the extreme stock market sell-off that we had in April, I think that before, up to the announcement of the reciprocal tariffs, people really thought Trump was bluffing. And then when he really announced the sky-high tariffs, I think that somehow people thought that Trump was really serious about going through with 145% tariffs on China or like 34% on Taiwan, sky-high outrageous tariffs on these various countries. And then he even mentioned, I think Trump even mentioned that like he wasn't paying attention to the market at all, but we really know that he kind of is paying attention to the market. And he quickly reversed course with the 90-day pause because I think he even got scared that, markets are reacting wildly to his tariff threats.
It was, we felt we were falling off a cliff and we needed something to catch us. So, I think that, go ahead.
And the point I want to drive forward is this, like, I think going forward, tariffs will continue to dominate the headlines for the markets. I think that regardless of whether or not we see, good earnings or, other good news, tariffs will continue to pull and push the stock market going forward.
Yeah, I think that I agree with you that tariffs are going to kind of dominate the news feed because
Yeah.
they are so they're so disruptive. They also carry along with them like really interesting storylines, like back to this tariff fight, right? Very quickly, like retailers were like, we're not going to be able to stock for Christmas. And I think, along with a lot of other factors, the leadership of the U.S. were like, whoa, it's not going to look good if people are like, they don't have Christmas ornaments, they don't have Christmas stuff. And they're going to look back at the tariff battle and they're going to say, who caused this? And they're going to point
Right.
it up.
And look how quickly he backtracked.
So all that stuff was like, and I think leaders were telling them, hey, you're going to have empty shelves and that's going to be an ugly scene. People are going to be really, really unhappy. So I think that's the big story. Now, what else aside from tariffs? What else is going on, right? Higher interest rates. Now they're not like going up so high that they're just breaking everything, but they are going up. And it's interesting to see that I saw a housing report today, and actually there was more home sales than expected, which is interesting because the interest rate is higher than it was before. Right. And let's see if this thing's.
Do you think that has to do with the Doge layoffs and the unemployment? Because even though interest rates are high, that could also affect, people forcing it to sell their homes or.
Well, we're not even close to that right now. Where I was leading was, so you see, this is for the 1 year. Let's look at the 5 year. That might tell us a little better. So we are operating at a higher interest rate level, but we were super low back here.
Yeah.
Like, for example, the house I'm in, I refinanced during that time because I got a 2.5% rate. 2.5. That's like insane. That's lower than inflation. And people can't get those rates anymore. You're in the sevens. You're at 7.25, 7.5, which is still, if you look at it historically over the last 50 years, not that high. So now we're on the higher end of interest rates. If we continue to climb, it's going to put more pressure on the housing market and as well as other things. That's being caused by, for sure, the Moody's downgrade and
the poor bond auction on Wednesday.
Yep. And this is going to be, if interest rates rise like another 50 basis points, the stock market will fall 10%.
Right. Yeah. It'll continue to put pressure on the markets.
Yeah.
That's why Trump is continually pressuring Powell to cut interest rates. And so far, I'm not sure if we have a political Fed or not, but he's definitely responding to like Trump's tariffs and they're looking at inflation too, because at the end of the day, the end goal for the Federal Reserve is to keep unemployment rates low and also to control inflation. So they're looking at these two key metrics at the same time. And, Trump is looking at inflation rates and he's saying, inflation rate is low enough so the Federal Reserve can go ahead and cut. But they don't know what Trump is going to do with his tariffs. That's why they're kind of backing off until the second half of this year in order to make their decisions. And in the meantime, though, the 10-year Treasury yield and the 30-year continues to put pressure on the overall stock market.
Good.
Yeah.
So I think, did you want to talk about some technical trading now, or did you want me to kind of get into some stocks that I think are interesting at this time?
You can go ahead and talk stocks first, and then we'll go back into the technicals.
Okay, perfect. And FYI, I don't know if it's just my headset,
Yeah.
but it seems like your audio is dragging, like you have a slow connection. Hopefully, it's just me.
How about now?
It's good. Yeah, it's good. Just at times
Okay,
it
cool.
slows down. All right. So over the last week, definitely this past week was pretty red, and there was a couple of green spots. And as we look at the market, the last month has been a good one, right? We've seen the big cap stocks begin to work again. Meta's up 25% in a month. Wow, that's a big cap. And you got Nvidia up 32%. And that's why heading into the earnings, and I'm going to cover Nvidia in detail. I think Nvidia has to show up and play perfect, or the stock's going to come down because it's really run up over the last month.
Right.
You have other stocks like Tesla. I mean, Tesla is kind of its own animal, but you have these stocks really moving. These big cap stocks. Apple over the last month, not so much, and the last couple of weeks have just been brutal for Apple. They are in trouble. We had United Healthcare just get slammed over the last month. Jeez, brutal. But let's kind of take a look at Nvidia, because most definitely that's going to be the star of next week's show. And Nvidia, to begin with, is I have so much respect for what they pulled off. Their stock is flourishing. This is deserved. Their market cap, in a way, I mean, you can explain it. You look at the growth rate that they have. Okay, that's a phenomenal growth rate. Their cash flow, which is one of the primary measures that I take into my valuations. Back when Nvidia was just a normal company, it was like 4.2 billion in free cash flow, and that was a good year, right? 4.2. So then the data center build out starts for AI. Now they're at 60 billion. Okay, that's like 15x their previous free cash flow. That's I've never seen that. That's phenomenal. Awesome.
Exponential.
And gross margins are really good. Now, the question with Nvidia is, for how long will companies build out these data centers? If they keep building at the rate they're building, most companies will go bankrupt that are building out these data centers. It's not sustainable. They cannot put that kind of capital. And there's been other parabolic stocks like this, and it didn't end well in any of those occasions. Now, for the past year, this stock has been good if you bought exactly a year ago, but you wait a month and you're just breaking even. Okay. And you've had some really low points too. So as we head into this earnings, if Nvidia shows up and has a perfect earnings, they show numbers that are just incredible, stock maybe moves 2% higher, maybe 5% higher. If they signal any kind of like, well, in a year, we're not sure who we're going to sell stuff to because we're running out of people that have $10 billion laying around to spend in NVIDIA gear. And these tariffs have to start, affecting NVIDIA.
Yeah.
Last is DeepSeek created a big problem for NVIDIA. And I was talking to my 20-year-old son about this. Is what's great about technology is that over time, the price of technology goes down if you measure it by the compute that you're getting.
Right.
Quality goes up, performance goes up, price goes down over time. That's a fact of life. That's just going to happen. So NVIDIA comes out with really expensive GPUs. They keep making better GPUs. And I think they would like to think, well, our prices are going to continue to go up. Sorry, DeepSeek showed up. And DeepSeek said, we didn't have access to all those GPUs. And we created a large language model that is not the number one model, but we did it at like 1/250th of the cost that OpenAI spent. And if you look at companies, a lot of American developers have downloaded DeepSeek are working with DeepSeek because that makes a lot of sense. Why would you? It's like people need cars, and the first generation that came out were at the price of a Ferrari. Well, you can't buy everybody Ferraris. You're going to go broke. So then comes along DeepSeek, and to use that analogy, they came out with a Toyota Camry at 20 grand a piece. That's the one that most people are going to buy, even though it's not as cool and fast, as sleek as a Ferrari.
I want to mention, I want to mention something about price. While I do agree that the price can go higher and higher and higher, like Nvidia realizes that chips will eventually become commoditized, and I think what separates Nvidia from the rest of the chip companies is that they developed a ecosystem on top of their chips. So they're allowing other companies to come on and use their ecosystem of chips, and they charge a subscription fee for that. And I think that them looking at other sources of revenue would separate them from Nvidia. And going back to what you said about the like the stock not moving for about a year or so, I think that um, the stock price is always on growth expectations, like like how fast the revenue would grow in the near future. Well, I do agree that some of the revenue has stalled, especially with um, you know, possibly slowing capex spending, commoditization of chips. I think that if other mega cap tech companies like Google, Microsoft, or Apple or Meta has said that they're going to increase capital expenditures, they're going to purchase more NVIDIA chips, and they're going to continue to use NVIDIA's ecosystem, I think that NVIDIA can possibly continue to move higher. And that's why going with the DeepSeek AI, like what you mentioned about DeepSeek, that's why Jensen Huang, which is the CEO of NVIDIA, has been a pretty vocal critic of chip export restrictions to like various other countries. And that's because like if you look at the global marketplace for chips, right, and with DeepSeek AI and you know them using cheaper chips to build out a AI model, I think that if NVIDIA is not able to get all these other partners to partner with them, regardless of whether or not they have NVIDIA chips in the black market, they would lose market share. And yeah, and that's why I think that it all depends on increased spending, the restrictions from the Trump administration and what it looks like going forward. But I think that there is definitely potential for Nvidia, even though it's been like you said, it's gone nowhere for about a year or so, right?
And think about this, right? So now, way back when I graduated college, I was a corporate accountant for a publicly traded company, and so month end closes, quarter end closes, year end closes, so that whole analysis. So what you're looking at here is the quarterly revenue from Nvidia, right? And if you were to like set your expectations of, okay, let's go 2 or 3 more quarters, imagining it, right? So we're going from 26 to 30, that they added 4 billion, then they added 5 billion, and then they kind of went back to 4 billion. So let's say, okay, they're probably going to go with 43 billion in revenue. If they hit 40, 44, 45, the market's really going to like it. If they hit 42, the stock will sell off by like 20% immediately. Okay.
Yeah, there's going to be a knee-jerk reaction for sure.
Yeah, and then they'll guide and they'll say, okay, well, we came in at 42. We think we're going to do 45. That combination, the analysts that cover this stock that work for the hedge funds and all the big money, they will immediately sell. They'll say this thing. So infrastructure is exactly what they call it, right? Let's think of a big infrastructure piece, a bridge, like a big, beautiful bridge, Golden Gate Bridge in San Francisco. It's one of the iconic bridges in the world. They built it once, and it's been there, I don't know, 80, 100 years. I'm not quite sure how many years, but you get the point. Infrastructure gets built once. Now, this is infrastructure for AI, but it still has some of the same characteristics, which is you build a large language model with a GPU supercluster, and you're done. And you're done. And let's say it was some big corporation, let's say Meta. Okay, they used the supercluster, they did a bunch of work, and they go, okay, great. Here's a check for the cloud fees, and now we're going to go off and continue on. Well, now that supercluster is idle. Okay, so it's idle capacity, or it gets used by somebody else, but it doesn't get rebuilt. It's not like Nvidia.
Yeah.
It's not like, oh, and Meta's done with their large language model. We got to throw away this supercluster and start all over again. No, you get to reuse it for the next customer, and you provide it as a service. So these data centers, are charging for the use of this infrastructure. That said, Nvidia is a cyclical stock. They're going to have periods of growth, and then once everything's built, like the Golden Gate Bridge, we don't need a bridge anymore, so it goes away until there's another, big causal factor that causes a big increase in demand. That moment's going to come. I don't know if it's going to come in the next 12 months, in the next 24 months, but it's out there. And if we were to be in this build out for more than 2 years, I'd be surprised. That's what I've been saying. I've been commenting on Nvidia that this is really setting up to really torture investors for a year. I have videos on my channel. You can view them.
I agree with
I've
you.
been consistent.
And if I could show my chart for Nvidia as well.
Yeah. Go ahead.
I also agree with you that Nvidia is a cyclical stock. I think people forget because they had a huge run up in 2023, 2024, and a parabolic run up, and it's been kind of consolidating since. And people forget that over the past, 5-10 years for Nvidia, it's pretty much had the same pattern. It's gone up and then gone down for about a year, like you mentioned, or so, and then gone higher. So I'm going to go ahead and share my screen real quick.
Okay.
For the chart of Nvidia. And so currently, I'm charting Nvidia off of the April lows when the reciprocal tariffs were mentioned. So as you can see on the MACD, which signals momentum, and currently if you see green bars here, it signals bullish momentum. So continuation for the price is to the upside. So we could possibly see whether or not it's before earnings report or after earnings reports, regardless of whether or not the earnings report is down or up, I expect to see continued upside. And this number here is kind of the Elliott wave pattern. So Elliott wave is kind of speculation, and it kind of charts how the market behaves or the price action behaves in waves. So what I'm seeing here is an impulse wave, and an impulse wave is basically a huge move towards the upside. So I could see like a 1 count here, and this is a 3, and then a 4 consolidation here. So the reason why I believe that there's going to be one more push to the upside is because, like I mentioned earlier, the MACD is still bullish, signaling continued bullish momentum. The price has not really rolled over yet. And you can see here, we sort of got a green bar here for Nvidia on the daily time frame, even though the overall markets were down pretty big. And so price is kind of moving sideways at the moment. If we were to see a pretty big drop in Nvidia, I would need to see the price roll down, and then the MACD have a bearish momentum here, which is a cross of the averages. And so if I look at the weekly time frame, which is, so when I talk about time frame, so every bar here signifies a daily time frame. So 1 day if I'm on the daily time frame, and on the weekly time frame, every bar here signifies 1 week.
Mm-hmm.
And like you mentioned earlier, the Nvidia has pretty much gone nowhere for about a year, since 2024, mid 2024, late 2024. The price has stayed pretty much relatively flat. And you can see that the MACD on the weekly time frame has been rolling down. So
Yeah.
you can see that we have a lot of red bars here. And interestingly enough, if Nvidia were to, you know, be a very bearish stock, so we could see like continued downside. Even when the MACD is negative, usually we would see like a complete reversal, like downward price movement. But you can see like the price movement has been relatively flat. And most recently, we got a bullish cross on the MACD, which signifies that, there's going to be continued bullish momentum, at least in the near term. So that's why I mentioned that regardless of, if I want to remove all this text here and make this cleaner, I would say that regardless of whether or not Nvidia has, an immediate downside reaction or not, I expect bullish momentum to continue at least for the short term. Unless, price they absolutely blow earnings like out of the water, and they completely destroy earnings. But yeah, we'll see how Nvidia goes, and that is the next catalyst to watch for the near-term future.
So I'm probably going to host a watch party for Nvidia on the 28th. And what is it? The 28th is a Wednesday, right?
Yeah,
So
that's Wednesday.
I'll be sure to let you know the details there. I'll host it to the members of the channel, because obviously that's going to be, and FYI, every time Nvidia announces, the last couple of times, the stock in the after hours has gone up 10%, down 5%, up 7%, down 6%, opens the next day, trades down 6%. And it's like, what? The market is not sold on it, or it's not convinced of it. It's thinking, okay, is this going to last? It is, it is the stock that everybody's watching. The other piece to AI that is somewhat of a riddle that I can't solve is, I hear about the spend, and you hear like so many talk about, oh, AI is going to change everything. It's going to be awesome. It's going to be great. Now I'm going to show you. I'm going to point to one example that's very clear and real. Robotaxi, Waymos. That's artificial intelligence, and that's real. You have a machine picks up a human being, drives them from point A to point B. I'm clear on that use case. That took 15 years, and I'm clear on that use case. Put a period on that. Somebody please show me another example, just like I just showed, where AI is reaching the end user. And I don't want to hear OpenAI, because that's a search screen. I get it. OpenAI provides answers. That's fine. But I hear about, my son was telling me, he's 20. Oh yeah, AI is going to start coding. I'm like, that's ridiculous. If machines start coding software, it's going to have bugs. It's going to be susceptible to hacking. There's going to be so many problems with it. And I have a good friend of mine that was like, he loves OpenAI, and he's an anesthesiologist. He's like, oh yeah, a lot of my friends in medicine use OpenAI, and I'm like, well, just between you and I won't mention his name to protect the guilty. But in the medical profession, everything is you have to follow the strict medical procedures.
Yeah.
And if you don't, you can lose your license, lose your malpractice insurance, lose your job, lose your career. If you all of a sudden say, well, I opened up this AI app and it said that I should do the surgery this way, you would be immediately fired. That's like preposterous for anybody to ever think it's going to reach.
Like if it goes wrong, like who are you going to blame? Like the AI?
The AI said that I should, so back to the question, and I'm really open to hearing an example, but can you think of an example that's like, here's the killer app, or here's the killer use case for AI aside from robotaxi?
I think that's what Apple has been struggling with, actually, like, because people have been saying, like, as far as AI goes, right? all use cases have pretty much been at the enterprise level, which at the company level. But a lot of use cases, a lot of potential actually exists at the consumer level. And not talking about OpenAI or ChatGPT, um, Apple continues to struggle to bring AI to the consumer. They've tried to do that with the iPhone 16, and they said that they have multiple partnerships with Gemini from Google and ChatGPT, but we really haven't seen anything concrete yet as far as AI goes. So,
And to add to that, Microsoft came out with their Copilot, and from what I hear, it's failing miserably. The users are like, this is the good news about Copilot is it gives you a bunch of content. The bad news is it's worthless. So if you want to
yeah,
create noise and a bunch of content, use Copilot.
right.
But the usage is really low. It doesn't meet the people are expecting that, hey, I'm going to open up PowerPoint and I'm going to say, create a presentation that has this kind of slide, and do this and do that and do the other. And it doesn't even come close. And it's beginning to be classified as a one more failure. Siri, which comes on iPhone, right?
Yeah,
Remember that app?
iPhone.
Remember how it was a shiny object for 2 years? And everybody's like, oh, cool. And my family had fun with it. We would ask it silly questions, and it would come back sometimes with a silly response. And then we had Alexa from Amazon. And this is circa 10, 15 years ago. Shiny object. Yeah, Google Home. So I've seen this movie before, right? And the movie didn't sell. It was like people didn't stick to the chat bot that they were handed very conveniently on their phones. They didn't stick to it. They went back to, Siri's fun and everything, but when I really want good information, I go to the source of the right information. So we'll see. And this is what I struggle with is I see the input of capital into AI, massive input of capital, but I'm not seeing the output of value to the consumer or even to businesses. I've yet to see a business go, hey, we used to employ 1,000 people to do this, and now we only employ 10, and the job's being done even better. There's theories that that's going to happen. There's a lot of theorizing, and people are embracing those theories like it's already been done. And I'm like, I don't see it. I don't see it anywhere. So, and I'm not the dumbest guy in the world. I actually am pretty observant of where these technologies go.
Do you think it's a bubble, or do you think they need to reset valuations a little bit?
Well, here's the thing: is like the dot-com bubble, right? It happened in 99, 2000, 2001. And were you born then?
Yeah, I was like 6.
Okay. All right. So you may not remember this. So I was in 1999. I was 31. Yeah. I was 31 years old. And I was an early adopter of the internet. Is that right? Yeah. I started using the internet like in 1991. And the internet was terrible. It was like bulletin boards. Have you ever heard that concept?
Not exactly.
So you see my screen. This is a Google Sheet.
Yeah.
This is an example of what the internet looked like. It was all character based. It was like, you know what a bulletin board is in a school?
Yeah. Mm-hmm. In school. Yeah.
You can post.
Put pins. Yeah.
Put pins in a piece of paper. The concept was, early websites, you were pinning information out there. And we weren't even to the point where we were ordering on Amazon as freely as we were doing online banking and so forth. But the connection, I was like, this is going to work. This is totally going to work. And the long and the short of it is it worked. We have Amazon, we have Facebook, we have Uber, we have DoorDash. It worked. But the timing, it took like 10 years for real business models to come out. Early on, all these like early business models failed. Even business models that today are very successful, they failed. And that's what's going to happen with AI. You're going to have what is perceived as the leaders, and a lot of them are going to go away. Right. Facebook was not the first social media company. It was MySpace. And MySpace made some errors. Facebook learned off their mistakes. Fast forwarded. Spotify was not the first streaming service. It was Napster. Remember that story? Do you remember? Napster came out like 24 years ago. And they got crushed by the music industry, and they're gone. But they were the best. So Napster in their time was the most visited website on the planet, period. So it's super successful, gone, doesn't exist. And I can go on to search. The best search engines early on were like Lycos, Yahoo, and so forth. Google came into the scene like 6, 7, 8 years after search engines were a thing, and right. They mastered it and they took over. So back to AI. Do I believe AI is going to change computing? Yes. Do I think it's going to reveal, create, and deliver a great value? Absolutely. In 10 years. It's not going to be in 10 months. And I think that is going to weigh on investors, because we're investors. And investors are going to be like, let me get this straight. Collectively, all these businesses have invested $1 trillion, and we got nothing to show for it. That's right. Well, why are we investing? It's just insane. You got to show me something. You got to at least show me a couple of killer use cases.
But you know what's funny? These companies, at least these mega cap companies, have to continue to invest in AI. Otherwise, they look like they're not doing anything with AI. They're not catching up with the trend. So like they're forced to kind of invest in AI, whether or not they see immediate returns right now. They need to. They would like to see returns, maybe like you said, in 10 years, in 15 years.
Here's where I view it a little differently. So I just told you the story about Napster, right?
Yeah.
Napster was incredibly successful in getting users to go onto their site. Number one, in user traffic, which is, one of the big measures in the internet, especially early on. But what they had to do was deal with an industry, the music industry, that was clinging to the past. They were like, we don't want to let you be successful because we're giving up these revenue streams that are so important to us. So they basically, through legal measures, killed Napster. Okay. And then Napster was killed. So Pandora and Spotify and all the next players, a couple of things happened is they learned the lessons from Napster that got killed. Second, the music industry came to the senses and were like, the genie's out of the bottle. The internet's here. It's not going to go away. We either get with it and start partnering with like Apple. Remember, Apple had their online music service $1 a song.
Yeah. Mm-hmm.
Imagine that. I use like Spotify. I play 200 songs a week. That'd be $200 a week. Instead, now Spotify is, I don't know, how much they charge me? $15, $20. So what I'm getting to is when you see this massive capital investment in AI, and then DeepSeek comes out and says, hey, that's cool that you spent $100 million, building that. I built mine for 10 grand. Oh, and FYI, our solution looks like yours. Then a lot of companies are going to be like, oh, dude, we're wasting money. Like, we got to do it like that. We got to do it like DeepSeek. So there'd be a lot of pivot points in AI, like there was with the internet. Some things worked with the internet. Some things didn't work and were failures, but they were kind of productive failures because the next generation of companies learned from it and then took off with it. that's going to be an iterative journey that we're going to have, like, some progress, failure, and then we learn from that failure, progress, failure. And overall, over time, we're going to continue to see this get better and better. But it's just going to take time. And I can't tell you who the winners or losers. I would say that I would be very surprised if OpenAI was a leader in 10 years. Just judging from history. Chrome was not the first browser, nor was Microsoft's browser. It was Netscape. That was the very first. What happened to Netscape? It got destroyed.
Yeah.
So we can go to the early technology pioneers in this industry and show that, hey, usually the first ones to run through the wall get really bloody, and then they make a hole for everybody else, and everybody else can kind of get through the hole without getting too damaged.
Yeah, I mean, we have a lot of models from different companies. Like we have Apple. I mean, Meta is developing its Llama models, and we have Gemini coming from Google. And going about what you said about DeepSeek, I think, DeepSeek was definitely a breakthrough, especially with them using supposedly less powerful chips. But that's why, there's a lot of these export restrictions going on with the administration, because I think Trump also wants to kind of protect the American industry as well. Like they want to have all the more powerful chips, especially for Nvidia, for all these American tech companies, and not kind of export them, or maybe have another DeepSeek breakthrough with, in various other countries.
Yeah, that could be the case.
Yeah.
So Nvidia, that's going to be the story next week. On record, I think I heard you say that the technicals, the setup, you think it's going to rally, if anything, into the earnings and probably continue to rally.
Yeah, regardless of whether or not there's going to be a beat or a miss, I think over the next few weeks, I think we could see continued upside.
I love this podcast already because next week we'll get on this and we'll see, how wrong was I? I'll be how wrong was I? Was I completely wrong, or was I partially wrong? Or I think the stock, they have to nail it. They have to stick the landing. They have to get all judges to give them a 10, and their stock stays generally where it's at. If they blink, 20% drawdown.
But hasn't it been like that for the past, 3-4 quarters for Nvidia? Because like they have to nail it every single time.
And even after they nail it, it goes down.
Yeah. That's right.
So Eli, why? So we got some questions. So let's why wrong? What are your thoughts? Why wrong? Can you rephrase that, please? I'm not quite understanding it. Michael Anthony, what's up, man? So what sectors look best for the past week? Let's check that out. So man, well, this is the 1 week heat map, okay? And I think the staples sector looked pretty decent. Google kind of held their own, and that's a big cap. So communication services.
They had the event, right? The Google event. That's why it was up.
The Google, yeah, correct.
Yeah.
And then we have consumer staples. We're up, and pharma did okay. That's a tough question. Usually I could say, oh, this one went up really nice, and this one didn't do too well. So I would say I'd probably have to be more specific, which is for the past week, Google did really well, and a couple pharma companies did well. Intuit had a phenomenal week. They had a very good earnings. And GE, this is, I think, the generation power unit. They did well, but everything else was kind of crummy. I mean, there were some pretty crummy areas like Apple. So good question. Thank you. So I think we have this question again. You just said, I wish I was wrong. What do you prefer to miss that story? On Nvidia, I think what you're alluding to is, am I missing a huge opportunity? Potentially, but what I have to admit, I did not see this move. Okay. I've invested in semiconductor for a while, like 15 years, 20 years. I did not see this move. Nvidia, and maybe it was because I remember Nvidia being a video accelerator for video gamers. That's what they did. And then they started, the Nvidia chips were used for mining Bitcoin. And then they started to be used for this particular use case. And people started talking about AI. And again, the piece that I was in disbelief about, I still am in disbelief about, which is show me the use cases. They're not there. And everybody keeps theorizing this, but everybody's talking about stuff we already saw, which was Siri didn't work. Alexa didn't work. So I was hesitant about it. And then the move really went up, right? So this is the move that we saw in Nvidia. If you didn't catch that move, good luck. Because I think this could end up being a real bad situation. Let me show you case in point. Cisco built the internet, and that's not misrepresenting the situation. Cisco routers were the best. Internet got built. They kept growing their revenue exponentially. This is their growth. Rocket ship. Stock got too expensive. It collapsed. Even to this day, Cisco stock has never re-achieved that stock price. This is a real business that continued to grow year after year after year after year after year. So we've seen this movie before, and this is how it ends. So this is why I think Nvidia, even though they keep growing, they keep doing well, and this is, the internet is massive, right? The build out for internet was huge. And this is what happened to Cisco. Cisco ended up being the most valuable company in the stock market. Does that sound familiar? Nvidia ended up being the most valuable company in the stock market for a little while. And I think Nvidia is going to have the same outcome, which is it's going to trade at $75, $65 a share at some point and probably stick there for a while. Investors will not want to touch it because they're like, yeah, we kind of knew that was coming. The stock had risen too fast, and it's a cyclical industry. So we'll see. I was wrong on Nvidia before. We'll see. So Michael Anthony, I bet Nvidia might beat. Yeah, that's what's weird about company beats and then they sell off. Sabir, good to see you, man. Oh, he's going into quantum. Oh, thank you, Sabir. You're doing me a favor. Quantum stocks. All right. So if it wasn't interesting enough, let's talk about these quantum stocks that have no fundamentals, but their stocks are up 1,000%. So who cares about fundamentals? You don't need no fundamentals. Nobody needs revenue and profit and cash flow. That stuff's for long-term investors that don't know how to make quick profits. So your initial thoughts on quantum?
I think quantum stocks have, they have years to come. I think that it's going to be a while before we see any actual realization in quantum computing. I think nowadays these quantum stocks are probably just based off of hype. So I think that if we see some quantum stocks, or maybe the Nvidia CEO talk about quantum, I think some of these quantum stocks would get recognition. But if you look at the chart, right, you see like from $4 to $18. Like I don't think that they have any sustainable path.
Well, check this out. Like
to the upside going forward.
Deep Wave, when I guess 5 years ago, it was trading at $10. It got left for dead, right? So it was at 10, got left for dead, and now it's like, oh man, I can't get enough quantum. Now, the big question is, when will quantum computing be commercially useful, be commercially a standard? Is that in 2 years, in 10 years, in 20 years? What's your best guess?
There's a long runway for quantum stocks. I think that, until anything materializes with quantum, I think that they will just continue to ride the hype in the near term.
Amazing. It's amazing that, like, so this company, trailing 12 months, has $21 million of revenue. And that revenue is really grants of companies saying, hey, we'd like you to theorize this or talk about that. And they pay them some money. And if you know what price to sales ratio is, like when we look at Apple, this is Applied Digital, wrong. So let's go with Apple. So price to sales on Apple is roughly 7.5. If you divide 2.9 trillion by 400 billion, you're going to get about, about 7. Okay. All right. Perfect. Now, when we go to this quantum company, you have $21 million of revenue. So you divide 21 into 5,490, you get, is it 250 price to sales? You're paying such an extreme valuation for this business. And they're not making money, I don't believe, but maybe I don't remember it right. Yeah, the net income, they're losing $131 million a year. They are burning $52 million of cash. And it's like, so there's no timeline to when this product's going to be commercially available and then successful, right?
Yeah.
And you look at these metrics and you're like, wow, man. Now, I would say that I invested in Bitcoin and I did really well with Bitcoin. And some people could, I think, rationally say the Bitcoin bet was crazier than this one. And I couldn't argue with that, which is I was betting that Bitcoin was going to be used as a standard for transactions and maybe saving. And I think part of my theory that I was theorizing in 2018 became true. Some things were a curveball that I didn't expect. I didn't expect like Michael Saylor to be so passionate about it. I didn't expect the new president to be all over crypto. A lot of things I didn't expect, but I'm now selling my crypto. I'm selling my Bitcoin. I'm going to sell it at a good gain.
Oh, you are?
Yeah.
You won't continue to hold?
HODL. My crypto friends would correct me and say, you're a hodler, not a holder, hodler. All right. So this one here is incredible. And this is not the zone of my investments. My investments are Google. It's Apple. It's not Apple, Meta. This one here is showing a little bit of kind of rational thinking here. It shot up. It came back down. It hasn't shot up again. And year to date, still down 8%. Rigetti. And this is the one that I think when the CEO of Nvidia said, oh, yeah, quantum's like 20 years away. This guy was like, oh, that Nvidia CEO doesn't know what he's talking about. He only runs the most valuable semiconductor company in the world. And these guys, their fundamentals are terrible. $4 billion market cap, $9 million of revenue. So it's like you have to pay 400 times revenue. Yeah. And they lose money. So it's like, okay, this is irrational. Very irrational. Their margins, look at this. Have you ever seen a number like that? Profit margin is negative 1,500.
Crazy.
Yeah. Which is why it's a great investment, you know. They're really good at burning money. So that's quantum. Good one. All right. So the comments are coming in. Let's see what people have to say. Maybe they know this stuff better. So Michael Anthony.
Looks like Nvidia.
Looks like Nvidia by a chart has a sell signal on a chart. Then the CEO saying tariffs going to hurt future earnings potentially. Yeah. So this guy likes Cisco more than Nvidia. Yeah, quantum stocks were flourishing. Man, my 20-year-old son was telling me about quantum. We were talking about it. Even he thinks it's crazy. So, and then we got Pfizer in here. So I could talk about Pfizer later. All right, so let's keep rolling along. So let's talk about next week. So Nvidia is the big show. Let me look at the earnings really quick. Are you aware of any like news that's coming next week?
I think we have Trump's crypto event next week, and then we just have Nvidia on Wednesday, and then we have PCE on Friday, if I'm not mistaken, and then we probably have another jobs report around Thursday or Friday.
So hold on a second. The Trump crypto event, I totally missed that. What?
Yeah, I think there was some. Let me see. There was some meme coin dinner for the Trump token.
It's the crypto gala. What the heck?
Yeah, this should help, prop up some.
Yeah, I think that's why
Bitcoin.
Bitcoin's it was at 111, 112, hit an all-time high. And
yeah.
Wow, okay. Interesting. So that's going to happen.
Help propel like risk on assets. Yeah.
We have Pinduoduo announcing on the 27th before the market opens. AutoZone. So no big giant names on
right.
Tuesday.
Nvidia is probably going to be the main one. We have Okta.
Yeah, Okta, the kind of integration company, single sign-on company, and
Salesforce.
Oh, okay. So Wednesday is going to be huge because you got Nvidia. That's going to take most of the oxygen that the market can breathe, and Salesforce is probably going to avoid a lot of radar. I own Salesforce, by the way. I own that stock. Synopsys, they do software that helps semiconductor companies test their semiconductors once they kind of design a chipset and they say, okay, now we have to test it and see what kind of real performance it's getting. You use Synopsys software to do that. And we have Viva Systems, HP, the old hardware company. Okay. And then Thursday, Costco. That looks good. Real steady company. Dell, the day after Nvidia. If Nvidia gets crushed, Dell gets crushed automatically. Guilty by association. If Nvidia rallies, Dell will probably rally. Guilty by association.
Right.
So Zscaler is going to announce a software company in the security software realm. And then Friday, Unilever. Yeah. So it's going to be a pretty big week of earnings. I think it's going to be interesting. Very good. All right. So let's start kind of landing the plane. We went over some comments. That's good. Next week's going to be huge. I'll host a earnings party on Wednesday. I'll make sure to get you the information, and we can join like this if you'd like, and see what happened.
It's probably going to be another headline-driven week next week. I think
so.
Trump is probably going to say something, and then we have Nvidia, and then we have economic data as well. So you can watch out for that as well.
So I've got one of the members of my channel, Tony. He asked about United Healthcare. So United Healthcare got destroyed, and I started buying the stock because I owned United Healthcare for like years, and then I sold it in 2022, and owned another stock that was an equivalent or similar. And of course, these guys just got destroyed over the last, couple of months. And I started buying here. So far, so good. And the question is, what's the floor? I don't see this stock going down any further. I think this stock, we're going to wake up in 2 years and it's going to be trading at $600 to $800 a share. And I've tracked United Healthcare for 10 years. It's a stock that I invested in for a long time. I did well with the stock. I owned it for, 5 years, 6 years. Right now, I think it's discounted by 52%. If you weigh the free cash flow value, the intrinsic value of the cash flows, and if you look at the earnings per share value, when you look at this stock, right, United Healthcare is the leader of the space. And look at this stock performance, right? Now, it's been crashing and burning in a fantastic way, but in my life, I've never heard of a CEO being assassinated. Okay. Never seen it. Hopefully I never see it again. Following that, a CEO resigns. That's bad. And then the press is all over United Healthcare, and the whole investigation by some department of the government. That's all normal, by the way. But the press is kind of spinning it as, oh, that's a real big story. So the point I'm going to make is, I took United Healthcare from here, or I followed and owned United Healthcare from here to here. Thank you, United Healthcare. Thank you for the money. Did really well. And now the stock is back to where I kind of sold it way back when. And I'm like, hey, I'll get on that ride again. I'll totally get on that ride. So I think this is pretty much some smart money has come into the picture and started buying United Healthcare. And
I want to quickly talk about the chart for United Healthcare to kind of give everyone a big picture. Someone asked about what the floor potentially could be for United Healthcare. And if I could share my screen real quick.
You are on.
So basically, this is United Healthcare at the monthly time frame. The purple line would be the 200 moving average on the monthly time frame. And this is the 100, this is the 50 moving average. You could see that United Healthcare pretty much stopped right at the 200 moving average on the monthly time frame. And that's not to say that it could possibly go below this moving average and possibly wick around 200 or 190 level. But you could see that previously it has held at the 200 moving average. So it got a wick here, and started moving higher. And that led me to believe that, even if we get some positive extreme news, we could probably see this get a V-shaped reversal. But you could see that every time it came down, it took some time on the monthly time frame. So you could see maybe like maybe a few months before it started moving back towards the upside. And you could see that it broke the 50 moving average, which it previously retested. So it could possibly be near-term resistance around 500, or even the 100 could be near-term resistance around 374. But that's what I'm seeing currently. And you can see that the MACD, which signifies bearish momentum, is pointed to the downside. So there's still a lot of consolidation or a lot of things to work out on the price action. But so far it's holding that 200.
Nicely done, Fred.
Yeah.
Damn, that was good. So, and I'm thinking 2 years. Like I'm going to buy shares. I keep buying shares at this price. I'm like, yeah, I'll buy shares all day long at this price. And the reason for it, right, is when you look at a stock that's been going down like this, fundamentally you think, okay, man, their revenues must be really down. Their profits are down. Their cash flows are down. But these are bad news, right? Bad news stories. The CEO resigned. Okay. That's not good. Obviously, a CEO being assassinated is horrible. And, but let's take a look at their fundamentals, right? So
And the fundamentals actually are like, hey, everybody, get your textbooks out, get your notepad out, if anybody uses that anymore. This is how you're supposed to run a business.
You're not sharing your screen.
Oh.
Yeah.
This is how you're supposed to grow a business, right? United Healthcare. Here's 7 years of data. You grow your top line revenue every single year. You keep growing it. You keep growing it. You keep growing it. You keep growing it. You become the biggest healthcare insurance company in the United States. You just keep creating this scale. The brand to the customer is good. Free cash flow. You go from 13.6 billion to 24.8 billion. That's what you do to create value for shareholders. You go, every metric you look at this business, you're like, these guys are the real deal. Are they dealing with some bad stories? Absolutely. But based on cash flow, based on revenue growth, the balance sheet looks excellent. Fundamentally, that chart has nothing to do with the business. The stock price is not the business. The business is not the stock price. The business to me looks really healthy. They need a new CEO. They brought back the old CEO. He came into the scene and he did a totally, I think, good move for the company. He bought $30 million of shares. He's like, hey man, I'll buy the stock at that price. He bought $30 million, an individual. And I think that really helped the stock. So long answer to your question, Tony. I think we're near the floor. And I think next 2 years, I will accumulate United Healthcare and I will make money on it again. So, yep, good. All right. And then Michael Anthony, you drive a hard price, buddy. $200 a share for United Healthcare. We'll see if it gets there. All right. So I think we're off to the good start on the podcast. I know we had a couple of rough edges. We can probably file down and polish for the next go around. But I really enjoyed the podcast. And let's talk about your channel one last time. I'm going to go ahead and share my screen. I'm going to kind of introduce his channel, and then I want you to follow me, which is, so I think you heard high intellect from Fred. He really knows his stuff. I love his charting. I love the perspective he brings. So do me a giant favor and go subscribe to his channel and support this guy because he brings a lot to the investor community. I'm going to be having a podcast with him and probably do more things with him because I think together we can bring more to my community of investors. So please support his channel, and I'll turn it over to you, Fred.
Appreciate it. Thanks for having me. I really enjoyed this podcast. And don't forget to check out my application at toastbeans.com. You'll really enjoy it. It's pretty much my insights on individual stocks and market analysis. And you don't have to do the research. And so you can just read it and see what you think and make your investment decisions based off of that. So, yeah, go ahead and check it out. And yeah, thanks for having me again.
Yeah. And this is going to be the podcast for Fridays. And as often as Fred's available, I'd like to have this back and forth. I love the segment on United Healthcare where I led with fundamental analysis, kind of high level, long-term investor kind of thought process. And then you came in with your charting and kind of, okay, well, let's look at where the data from a chart perspective lands. That's excellent, man. I could do that all day. So good stuff.
Awesome.
All right. So we're going to shut it down, everybody. Thanks so much. Again, please check out the app that Fred has, and please go subscribe to his channel, support his channel. Let's get him up to 1,000 subscribers as soon as possible. And that's it for this episode of the podcast. And you hang on tight, Fred, but everybody else, we're going to tune out. You guys have a good night and have a great weekend.